Hey traders, it's Ryan with Stock Investing and Trading 101. Today we're going to be doing a weekly update on some of the big news in the market, how my portfolio is performing compared to some of the major indices, and then just kind of looking at the S&P 500 and the Nasdaq in technical terms and talking about that. So first, to get into it, the market was kind of volatile last week, a lot of up and downs, and surprisingly enough, the market lost about 0.5% over the course of the last week in the S&P 500, and on the Nasdaq, it lost nearly 1% for the past week. In reference to my portfolio, we gained about 0.6%, so we outperformed the S&P once again, and it's always great to make money when the market's going down. And so just to quickly go over my $30,000 Robinhood portfolio, we're going to go over just pretty much my core positions, and then we're going to look at a few charts and talk about what could happen going into next week and the rest of 2021. So for my options positions, I have a couple of Leap options. I have one on Activision, which has been performing pretty badly. I bought this during a dip after earnings, and Activision has been just getting obliterated. And also, I have a similar one on AT&T. The Activision one expires in January, so we don't really have much time on this. This one expires the mid of 2022, so not as worried about this one currently. But nonetheless, my stocks are really the core positions of the portfolio. And currently, my biggest position is PayPal, which has had a pretty rough quarter or month, down 20% during the past month. And for such a high-quality name like PayPal, or even Square is on a dip as well, I just think it's a good buying opportunity. We got in at a decent price, and I just don't really have too much worry holding a stock like this, especially having it at a great average price. Next, we have a decent-sized position, $1,500 invested in Las Vegas Sands, which has been performing very poorly. I was hoping for a faster bounce on this stock, but it's kind of just been sideways consolidation, and so right now I'm just kind of collecting, just holding on to it, and kind of seeing what happens. After that, we have Verizon and IBM. These are some classic dividend growth names. IBM actually spun off recently. They're kind of breaking off their company into different companies of the legacy companies and then the more growth-oriented companies. And similarly, Johnson & Johnson did something as well where they're breaking up their healthcare and their pharmaceutical and their devices companies. They're kind of breaking those up, and it's kind of a theme lately for some of these, dividend growth stocks or, just dividend aristocrats that have been around for generations or, multiple years. After that, we have Scotts Miracle-Gro, Disney, which has had a pretty rough earnings, but I think Disney is a good stock to look at currently. MasterCard, the credit card stocks have been not performing very good, and I think these are also pretty high quality names, so not too worried about a stock like MasterCard. I think it's a great investment for the long term. Next we have Kraft Heinz, Unilever, FedEx, Activision Blizzard, and these are pretty much the biggest positions. I'd say the top 10 positions in my portfolio currently. So it's a good mix of growth stocks, and then we have dividend paying companies because I really do like the dividends, but I also like to have the growth. And yeah, I'll just quickly scroll through the rest of my portfolio. I'm looking for a buying opportunity, which we're going to get into very shortly in some of the technology stocks. I think the market is pretty much right back at all-time highs, and I don't think it's looking very good technically. So we can scroll over to that. Here we have a chart of the S&P 500 micro futures. So this pretty much is a S&P 500 chart. And as you can see, we have an overbought, and this is on a 3-year time frame. So, even on a 1-year time frame, we're just at overbought territory, significantly overbought territory. we had a small little pullback, and we're kind of getting right back to that 70 level on the RSI. The MACD is also starting to show weakness, and it's getting very close to having a bearish divergence. And we also have volume relatively low compared to back here when we were making these highs. So back to the 3-year chart. In my opinion, this chart is looking pretty toppy. We have an overbought RSI. We have a doji candle here, which could represent a top very soon, within the next couple of weeks possibly. We also have the price breaking above the top Bollinger Band, which is bearish. Typically when it breaks above this top band, it will snap back within this range very quickly, and I wouldn't be surprised at all to see it pull back to this mid-level or somewhere in between here, and it could even go lower, but I'm not going to call for a massive crash or a correction or anything, but I do think the market looks significantly overbought. Looking at the Nasdaq, we have a very similar situation here. We have the RSI showing overbought. We have a bearish divergence on the RSI because we have it making a lower high on the RSI, although the market, the Nasdaq, is making higher highs while the RSI is making lower highs. And the MACD, not necessarily bearish or bullish. I guess it's still in the bullish direction. So, I'm not calling for a crash tomorrow necessarily, but I do think, there's going to be one within the end of the year or even sometime in November here. So that's kind of what I'm seeing in the markets. And how I'm preparing for that is I have multiple VIX options on my Thinkorswim account. So I got some VIX calls for December and for January, kind of hedging my Robinhood account. And that way, if the market continues to go up, we have this $30,000 portfolio that will continue to go up, and we will make, a decent amount of money. And if the market goes down and the VIX, rises because of that, we will make money off of our VIX options, and we also have buying power available to buy the dip. So always remember that cash is a position. I always like to have cash in my portfolio, especially, during all-time highs. I could see if the market had a 10% correction, going all in with your money. But the way things are looking, I think you want to at least have a little bit of cash. And on top of that, I don't like to abuse leverage, but I do like to use it as a tool whenever possible. And I have the ability to get $30,000 worth of leverage. So if there is a significant correction and I see buying opportunities in the Nasdaq or Apple or Microsoft or any of these Amazon very high quality names, I will take leverage out to buy these stocks on the dips and wait for them to bounce back up and decide what to do from there. So I just wanted to give you guys kind of an update as to portfolio performance, market outlook, and just a little bit of looking at technicals on Thinkorswim here. I'm going to be uploading another video where we're going to talk more about some of these indicators such as MACD, RSI, and making specific videos for each of these indicators. So be on the lookout for that. As always, guys, thanks for watching the video. Don't forget to smash that like button, subscribe to the channel if you haven't already, and we will see you guys soon on the next video. Thanks for watching.